Well, hello, Maverick Traders. It is Joe with you here. It's the 27th. Well, this is the trading room, I should say, for the weekend, leading into the 27th through the 31st. This has been a while since I've done this, and I'm excited to be back, filling in for Rob. So let's jump into some fun stuff. You guys know how this works. Just take responsibility for what you get from these courses, and we can continue to share. I've got my 2 cents. We're going to take a look at the broad markets. Let's take a look at some of the current analysis, some of the news out there, and I've got some trades. And so we're going to go ahead and share them with the community as always.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
Before we move into it, folks, let's just do a quick reminder. We are doing our annual, I want to say annual. We skipped a couple of years. We had a little bit of a pandemic there, but I'm excited to get back to it. This is our Maverick Trading Summit. Hope to see you there. If you got the emails, the details are there along with our website. I just thought I'd mention it again. It's always a fun time. Okay, so let's just jump straight into last week's news. And to tell you the truth, folks, it was pretty much kind of what I expected. You know, we had a short week. It was interesting. We had Martin Luther King Day, the same day as the inauguration. And by the way, the same day as the National Football Championship, NCAA for you college fans. Yeah, that's what I was watching. But it was indeed a short week, but we came out pretty decent. The markets came out ahead. We were already moving higher, if you guys noticed, in the charts before we went into the holiday weekend. Came back, didn't miss a beat, and just continued higher. The S&P ended up closing at all-time highs. It surged up there very quickly. We knew that would happen. The other two, the Qs and the Diamonds, they're actually on their way up. They are bullish. They're not quite at those levels, but definitely glass half full. So the transition's been smooth so far. There's been a whole bunch of worries about the tariffs. 100 executive orders to be signed the day of inauguration. It turns out it wasn't as bad as expected. There's still stuff that's going to be coming out as we go, and I'll mention that as we finish up here. But the tariff worries have been pushed out, if any, but more of just kind of the same. So sentiment remains bullish. The markets didn't seem to really skip a beat. They just went straight back to buying. So earnings, on the other hand, are also showing signs of strength. Now, folks, we talk a lot about the top-down approach. I've got some trades to take a look at today. I'm going to break down the sectors, but it's pretty difficult to find a sector that's just getting really beat down or one that's actually emerging and doing really well, because I'm seeing good and bad in all sectors across everything. So I got to let this, we refer to it as a January effect. Rob made mention this is very interesting because usually it's a more clear cut, but when you have a transition of political outlooks along the same time that you've got some worries about inflation, blah, 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 it's this perfect storm. So it's a little muddled, but overall it is definitely glass half full. Please don't try to stray from that. I have found it very difficult to find some bear trades as of late, so I'm just going to take my time and build my portfolio slowly. So signs of strength across multiple sectors. Earnings are continuing to show those signs. Let's see if that continues to happen. Let's take a look at some of the economic reports over last week. And you can see here, unemployment claims. Donald Trump came out and spoke. The unemployment claims were pretty much in line. We have this beautiful soft landing going on in the U.S. economy. It's the first time I've actually seen it. They call it the Goldilocks economy. So you really don't want to kind of scare it away, but everything is right in line. Inflation, just when it gets too hot, we see some CPI and PPI numbers that you guys saw 2 weeks ago, not this week, last week, but the week before, showing signs of slowing. So all of a sudden it's like, well, maybe we can cut some rates here moving forward. So it's got the markets pretty content. Market analysis wise, well, let's just jump straight into how we finished the week, and it was another strong market. Real quick, let's just take a look at how we finished. The Dow up over 2%, the S&P 1.75%, Qs 1.5%. You guys can read this. Russell's up too. Oil actually struggled a little bit. I got this down 3.67. I saw it down as low as 4% with some of the futures in there. And this is, I really think it has a lot to do with some of the worries of some of the tariffs on Canada, let alone some anything specific to that. I know that Trump was already talking with Saudi Arabia, trying to talk to OPEC, saying, hey, how do we reduce oil costs? That might have something to do with it. I'm going to chalk it up to just a little bit of a reaction, although it is, it's a big move. So just kind of steer clear of it if you can. Gold also up 2.5% on the week. Could just be an oversold bounce. We're still trying to play all this out. And it does create a little bit of difficulty, at least with the volatility in some of these very specific commodities. So kind of play them as you can. Let's jump into the charts. And this is what I do. I trade the charts. So pretty obvious. We had a conversation. I've referred to this as a bullish flag pattern for quite some time, folks. Our first confirmation was to the upside. I wanted to see a little bit more of a volume or a follow through. Rob made a beautiful mention on this, saying, hey, just give me one more day. And absolutely, it gave him the bullish day that he wanted. Not only was it a confirmation of a bullish flag pattern, but folks, we ended up closing, well, above it, but towards the end of today, right at all-time highs. Where do we go from here? Doesn't really matter. What it matters is that we're taking advantage of what we're seeing in the overall markets themselves. So definitely showing signs of strength. Bullishness is there. The economy leans towards the glass half full. Sentiment is bullish, and a lot of the sectors are, along with some of the earnings. So let's move over to the Qs. The Qs have been a little shy, and we've been talking about this. The Fab 7, all those wonderful AI stocks and the things that we've been has been leading for quite some time have kind of fizzled out. But guess what? Look at this. Jumped right back up. So, here's after the holiday, and then we got the 3-day subsequent. It's right back up into some levels where it could actually gain some strength and maybe push higher. Now, obviously, it's not as high as its previous high. The diamonds are kind of the same, but it is showing some promise. And a lot of the numbers coming out in some of those tech companies and communication companies are definitely very, very bullish. So we'll see if that kind of continues. You can see here, guys, the volume's a little low. Still looking pretty bullish. Let's take a look at how we did on our heat map. This is for the week. Microsoft finished up. Apple slid a little bit for the week, but these are super strong. All of these stocks are still showing signs of strength. They're in pretty good places. Nothing's really kind of collapsing. A little bit of a pullback in energy, although energy is still a pretty strong sector overall. It just had a pretty good correction. We'll take a look at it here, guys. It's more of a bull pullback to me than it is something a little bit more scary because it did finish the week to the downside, but the overall motion of the chart still is pretty bullish. So what are we looking ahead to, this week? Well, let's take a look, folks. We got... we're into bullish territory on the S&P, and the Dow and the NASDAQ aren't too far behind. So for any skepticism out there, I kind of want you guys to kind of hold off and wait until the skepticism plays itself out, right? A little bit of bearishness, a little bit of reluctance or a bias. The problem is these companies are few and far between when it comes to specific, or I should say consistent sectors. I can find some super -3 stuff in some very strong sectors, and then vice versa. So I'm just kind of letting this play out. I think earnings season, the next bullet point here, it should remain in the driver's seat so far. A lot of these companies are confident and they're announcing numbers. They're projecting stronger ones. So if that changes, we'll see it, including or I should say, a bearish reaction to positive news. If we see some selling come into some of these stronger numbers, then we know maybe we're going to have a round of profit taking in the short term. Right now, we just really can't project. I believe the transition will continue. It's not over yet, right? 100 executive orders, the highest of any president. There's all sorts of stuff out there to scare people and make them happy at the same time. So just be aware of that, of some of the tariffs that were expected. Keep an eye out for it. I think the transition is going to be it's going to have some growing pains. So don't get too confident or complacent with what's going on. So you can see here, we got the Fed's fund rate and the FOMC statement. I'm not sure if that's going to change at all. Keeping it in line makes the most sense here. We have seen a little bit of stability in the inflationary numbers. They're coming down. So if we can stay on pace, I think that'll make the markets happy. Understand the Fed is just trying to react to what they see. But those CPI numbers and PPI numbers 2 weeks ago, along with some of the employment, are showing that, hey, they might have had it just right. So, of course, the whole world's going to be watching these numbers on Wednesday. We'll have our unemployment claims here, and then we also got our advanced GDP Q over Q. All sorts of other numbers when it comes to our currency traders out there. We do have a monetary policy over Canada. I think that's going to be something to watch, considering some of the turmoil that's going on and some of the worries with oil. So we'll keep an eye on that as well if you guys are both in, or if you're into that side of things. And then to end it off, of course, we got the PCE number, right? This number was not important to me for years until it became important. So we'll see. So we do have a little bit of economic news, not a lot. I think earnings and kind of this transition carries through most of this, but we'll be mindful of that as we go. We'll keep you updated through the week. So let's move directly into our market outlook, and it has changed quite a bit. We've been kind of flat, posturing, sideways, thinking about stuff, but we are starting to get something a lot more significant, right? It's that little wait and hold, but boy, boom, right up to this area. I kept it as a +1 for the weekly outlook, and the only reason I did is the extension of this move to new highs and the little bit reversal candle that we had towards the end of the day. My monthly outlook is +2. It could have been +3. I absolutely could. The only thing I hesitated on, folks, was a little bit of an anemic moving average. This 50 isn't quite sloping up like I'd like, even though the two absolutely crossed. So I want these to cross back over, and then I'll be a +3. So let's just jump straight into the sector analysis. And you know what? The only thing that really happened is everything got a little bit stronger. And well, let's just take a look at how we finished. Everything up a little bit. Energy dropped about 1.4%, but it was so strong over the last few weeks that it actually is just showing a little bit of a bull pullback. But everything else is just a little higher, a little stronger. A lot of stuff stayed sideways. Gotten +1s going to +2s, zeros going to +1s. That's it, and it's across everything. You guys can see that. I mean, the only thing that was really kind of hit down or punished was energy, and I think that has a little bit of a speculative or a little bit of worries. But past that, everything kind of moved a little higher. So we're going to take exactly what our outlook was, and I'm just going to add a little bit, right? So let's get started here. So first off, let's take a look at utilities. Now, utilities was at a 0 last week, and I'm just going to go ahead and just bump it up to +1. Very simple, because take a look at these last 4 days. It just popped up, got above the 20, retested it here, and then kind of stayed there. So it's a +1. It's above both moving averages. It's not breaking the bank and moving higher, but it is definitely out of kind of a consolidation or more importantly, something weak. So it was pretty easy to do that. Let's move over to communication services. This was a 0. I think this was probably the biggest jump that we had. And the reason being is because it was just slow to participate. Rob made mention of this last week, saying, hey, you know what? The Fab 7's not really participating, but guess what? It did. One little hesitation day on Tuesday, Wednesday, Thursday, and Friday. Boom, it is back up. Not only did it cross both moving averages at once, but it actually broke resistance levels. So I didn't want to go too aggressively, hey, let's +3 this thing. But it definitely went from a 0 to a +2. So I'm just moving it there. It's back in favor. It was actually the strongest sector this week. So there you go. Now, was it specific to the stocks that we've been following? Not really. I mean, the majority are, yeah. But hey, it's back in favor. Jumping over to real estate. Real estate was a weaker sector, kind of a -1, and I want to keep it there. I'm going to give it a 0, and the reason being is because I like the fact that it's trying to hang in there, right? It's staying between the moving averages. Let me go back a little bit because this 0 kind of takes up some space, but it is definitely trying to be comfortably consolidating above this resistance that it had towards the end of the year. You see that? So if it could just play this game, I'm not going to go +1 or +2 on it, but I'll definitely give it the 0 that it deserves. It's holding in there. Maybe there's just speculation on where interest rates are going to go, all sorts of different things we can look at. But overall, I'm not looking to purchase anything in it. Moving over to healthcare. Now, this is one that's a little bit more emerging. I am looking to maybe add some bullish trades, maybe a +1, +2 in this area. I moved it to a +2, and the reason being is because it just had this ascending triangle pattern that it was holding on to. You guys could see this was the close of the previous day, right? And this is, Tuesday, Wednesday, Thursday, Friday. And this had no problem just shooting up. Volume wasn't, blowing anybody's socks off, but it charged right above that resistance level or that ascending triangle, and the prices moved higher. So it's showing a little bit more of an emergence there. And it could be a lot to do with earnings. So I'm going to kind of move that a little bit in favor when it comes to maybe a +1, +2 trade in my portfolio. Let's get to industrials. Industrials last week, let me take a look here, was a +1. And this little candle that shot up higher, this is where it was at +1, but take a look at the follow through. So I'll give it a +2. It's just above both moving averages. above some resistance. You guys could see this is where it stopped over the holiday weekend. It's definitely above that. So its next stop is somewhere up in this area. So it's pretty easy for me to upgrade it. And these aren't being really upgraded past anything one up from where they were. But it is just showing you how much participation we're seeing in the overall market to the upside. Financials, really big, really good, doing awesome, still doing really good, good earnings, good numbers. I moved it to a +2. Financials was a +2. I kept it as a +2. And I think the reason being is because it looks like it's trying to build the top here. This is the extension that it had last week when we had a +2 on it, showing some real good signs. That's the resistance that it's got to get to. But the consolidation I've seen over these last few days is showing stability, not growth outside of norm, but stability, saying that, hey, we are financials and we belong up here. So I'm going to keep that on that +2 side. XLY was a +1. I'm going to keep it there. It did the exact same thing that the financials did, just not as aggressive, right? So it had the consolidation right there, which is why, hey, okay, good job. You're above those averages. They're pinching together, which means, had a little bit of a pullback, but it's showing that it can hang in, maybe move sideways. So I'll keep it where it was. Consumer staples was a weak one. It's been weak for a while. Now, it was a -3. And I could keep it as a -3. I think the only reason why I decided to put it at a -2 is because it did close above its falling 20, but this is still a -3. We'll call it what it is. Big bearish candle engulfing, and then it decided, hey, I can make it. It came back up, just finished barely above its 20-day moving average, so it's still out of favor. I did give it a -2 from a -3, but it's still by far one of the weaker sectors out there, and something that I'm not looking to put anything long in. Here's tech. Tech had a pretty good change, right? Tech actually went from a 0 to +1. Now, I could give this a +2, and the reason why I gave it a +1 is this. This is a Maribozu on open. So this thing gapped up and sold completely down. It's a bearish engulfing, and it happens to be this really significant area on the sector itself. Okay, whoop-de-doo. If it stays up in this area and moves higher, yeah, it's definitely a +2, +3, so on and so forth. But just kind of where it finished, it looks like it's just trying to play catch up. I know that these things feel like they're out of favor, some of the tech stocks, but they are still pretty strong, especially with some of the earnings we've seen. So I'm going to leave it where it's at. Materials was at a 0, and you could see that it climbed itself back up to its falling 50-day moving average. So I'll go ahead and give it a +1, and it just means that it's going to show it's a little bit of strength here. It might easily roll back down, and we'll go 0 and -1 on this. But where it's at, just showing a little bit more strength. Nothing really big to report on that. Let's get to energy. Now, this is the one that this was down, over 1.5% roughly about, but it's just a bull pullback to me. And what's tough about this is it's going to be the most tumultuous, right? It's tied to all sorts of things that are in the news right now. But if it can pull back and sustain this area and even set a doji reversal signal, take a look at the volume on that rollover. I'm sure most of that has to do with political outlooks and worries, sanctions, tariffs, you name it. But if we can sustain at this level, if energy can just kind of subside here, just turn back around, it could easily still be one of those stronger sectors. So I really didn't punish it for it. I didn't punish it for the days down. Now I can easily take this +2, which we had at last week, and turn it into a 0 or a -1 if it falls down. So overall, folks, this is it. I don't have the cool graphics that move things from left to right. But if you guys have been following along with us, everything was pretty much over here. And this week, it's pretty much over here. That's just kind of how things work. So another surge of bullish move into the markets across pretty much all sectors. And that's where we're at. So what do we got going as far as our basket? This is fun. I haven't done this in quite some time, folks, but I got a few coming off. I've got a comm services coming off, a consumer staples, looks like a consumer's falling off, which takes us down. Now we had a 0 outlook, right? 2, 3, 5, 3, 2. I'm bumping that up to a +2. So this is one of those times to where we're not going all the way from a 0 to +3, but we're going to a +2. Now, let me tell you the secret about this, and this is why I'm happy I'm able to teach this class. First off, let's give you the score. The score on this is pretty obvious. It's the slope, right? We got the 20 and 50. They're backwards. They're upside down. They're both sloping higher. But above the 50, above the 20, and above that resistance into brand new highs. I had to at least give it a 2. I think maybe we pull back or consolidate, but the surge that we saw is real. The movement is real. The strength is there. If you like it or not, that's where it's at. So this was fun. I got to take my market score from a 0 to a +2, right? You can see we need 1, 4, 4, 3, 2, 1. All right. So let's take a look at what that looks like right now. So what we have, and I did add my positions here. You guys can see the green ones. So we got no negative 2s. We got 1 -1, 2 zeros. We got 3 out of the 4 that we need on the +1 side. This is cool. And then 1 and a 1. Now I decided to add these 3, right? So I'm adding a +3. I'm also doing it in comm services because I could see another surge coming into it. Right? I like the healthcare. I think it's emerging, so it's a +1 on that. There's a couple trades out there that I thought were fun. And on the consumer side, not the staples, but the consumer cyclicals, I found something kind of sideways. It's Caesars. It's actually gaming. Now, folks, I spent a bunch of time looking for -1s and -2s. I looked for zeros in energy. I looked for -2s in utilities. I looked everywhere, and they're not there. And so what I was happy about teaching this class is I would like to put 5 or 6 trades on, but guess what? They're not there. I found 3 that I might do. And that's the most important. We don't have to put all of our stuff out today or this week or next week. You slowly build in and out of these. And it was really kind of fun to actually have to build this class and kind of suffer through it. I couldn't find -2, -1 trades for any period past 2 weeks that I was comfortable putting on. So we'll see if I can't do it next week because I'll be teaching this with you next week as well. So let's talk about the ones that I'm looking at. Now, these possible trades, folks, they're not the ones that you have to do. They're just suggestions, and they're trades that I'm looking at and things that if you find something similar, go for it. So this is the communication services, strongest sector for the week. I'm going to go ahead and do something pretty aggressive. This is Google, right? In the Alphabet Inc. I'm thinking of something on the 7th, right? 2 weeks out, 210, 200, bull call to spread. So it's going to be pretty much at the money and up. Basically, the range that I saw this hold. I'll draw the pictures here in a second. And then, or if you want to be something shorter term, a targeted butterfly, 200, 206, 212 targeted, also a +3. So let me zoom in on this chart and explain what I'm talking about. So, whoops, you can't see the 210, but it's up there. So the 210 makes the most sense. 210, very aggressive. Take it on there, keep it to February 7th, hold it, forget it. Now, the 200, 206, 212 came from the expiration cycle of January 31st. So the expectations of where the stock is supposed to be is below 206, which is the whole reason I put it on there. So if you expect a quick move to the upside, those targeted butterflies are really neat to make adjustments, take some half profits, things of that nature. Or if you want to hold this for a little bit longer to the 7th of February and let this thing kind of move higher, either one's great, kind of fun. So let's move on to our next. This is healthcare. This is GILD. This is going to be my +1 trade. Real quick, let's read them. It was a 92.95 bull call spread +1 for this February 7th. Something a little bit shorter term. Once again, another targeted butterfly. Still hitting that 95 target, but I'm going 93, 95, 97. It's a little bit quicker. It's a little bit faster. Just depends on what you expect the stock to do. Now, I'll say it one more time, folks. Stocks like this. You don't have to do this exact one. Anything in this situation. Okay, why did I like it? Well, there's definitely a line in the sand right here. Look at this, right? It's been there before. It's gapped through it pretty quick, so it's consolidating. So I think this 95, there's something to it. Whether it shoots up to that 97 and comes back to the 95, well, that's great. That'd be your quick butterfly. Or it consolidates a few more days and pops up to that area, that's fine. Or if it decides to consolidate a little longer and shoot up to the 98 and stay there, the vertical spread will work as well. So it is leaning towards the bull side, but it's not too aggressive of a trade overall. Let's move over to our last one. This is consumer. Now, this was sideways, another one that I'm not very good at sideways, folks, honestly, but I wanted to find something that I could. It still has a bias. This is Caesar Entertainment. It is definitely showing some signs of strength off this bounce and some consolidation, a little bit of retracement there. What I'm thinking is this is going to kind of float around that 35 level. January 31st, which is next week. These are pretty quick. 34, 35, 36 targeted butterfly. If you want to go a little longer, you could actually do a 33, 35, 37 butterfly. That's right. So just a little bit longer out, and all you have to do is just give it a little bit more room. Both of these do target that same 35. Now, if you think I'm up in the night, folks, this is why I love this class. Shoot for 37. All right, maybe we do 35, 37, 39, right? I'm fine with that. Somewhere up in that area, that's great. Maybe do that through February, the first week of February. I'm shooting something a little bit tighter than that. Maybe the stock comes up a little bit, hits this resistance line, and comes right back down. There's a lot of projection in these trades, which makes them kind of fun. But follow your rules, follow your outlook, follow what you need. You guys, I need at least 6, 7 trades in my portfolio, and I could only find 3. So that's kind of where I'm stuck. So overall, guys, earnings, I think, is going to take the driver's seat. I do. I think some of these bigger companies that people want to hear and see what they're going to do and their projections, we got a whole lot of AI talk, it's going to be fun. It's going to be muddled. It's going to be reactionary. And I think volatility kind of stays through January, maybe into February, as we get through this transition, I'm going to call it. This is the impact. It's kind of fun. It's driven by emotion. But if we can find something and measure something outside of that emotion to where we can take advantage of it, is what we're doing. So if you don't think you got to put all your money to work all at once, it's not going to do you any favors. Sector analysis is key. And right now, I can tell you, folks, they all go up and they all go down. There's good and bad and ugly and everything. Let's see what happens as we get through the earnings season and see if we can't get one sector kind of emerge as a leader. As always, whatever you try to do, make sure you're managing your risk. Position sizing is key. And only throw darts when you're comfortable throwing them. Talk to you later. See you. Bye, everybody.